Sorry. Oh, we're live. Hi.
It's
Sorry.
happening.
Hi, Roseanne. Welcome to Venture with Grace.
Hi, Grace. Thank you so much for having me. I'm so excited to be here this morning.
Me too. Okay, so let's start with your career. So, like, you were basically you were a scientist turned VC. So you were studying at Berkeley, and why don't we start with like what are some like in your research era or researcher era, what are some core lessons that you take to, eventually becoming an investor?
Yeah. So I was a chemistry undergrad at Cal, and then I stayed and started a biophysics PhD, which is basically chemistry. I studied protein folding. I worked for some amazing people, and that was probably one of the biggest things that I've taken with me. And I give this advice to people all the time of early in your career, it actually like doesn't really matter like what you do or where you work. It's like who you work for is like the biggest thing that matters, because that person, if you work for somebody great, like you're gonna learn and have a great experience. And even if you're at the best company in the world, working for somebody terrible makes everything a lot harder, especially when you're young. So I worked for like two really amazing women. One as a undergrad, Judith Klinman, and then another one as a graduate student, Susan Marquesi. I think I don't really use a lot of science like every day, right? Like don't really think about protein folding. Don't do a lot of like protein folding companies. But I think science really like teaches you how to think, right? And it shows me, kind of gives you like a mental model for how you think about the world, right? Like I was trained in like thermodynamics, everything's like an energy landscape, right? Like you're trying to move to like things want to be in lower energy states. Obviously, there's like high energy barriers between them. Things like enzymes or catalysts, lower that energy barrier. And so I think a lot about like, what do we do in products, or what can you do as a VC, or what can you do in marketing to try to bring down that activation energy to either, bring users or customers or founders or companies to like a lower energy state to like where they want to be. So I think that like kind of mental model has served me well. And really like, I think that kind of like technical training was really just taught me how to think. And I think that's the most important thing that I learned there.
Totally. I wonder, but nowadays, like I feel like protein folding is like extremely high. So
I know. Do you mind want a Nobel Prize? It's really cool. Actually, there's a woman who was trained by Judith, Sophie Wang, she was the first data scientist at Google in like 2006 or something like that. And now she's at DeepMind. And actually we were at a event for Judith's 80th birthday, and another woman there is actually the woman who runs the PDB, like the protein data bank, whose name I won't remember. But the PDB, like the protein data bank, is this like giant open source database of crystal structures. And every time you figure out the structure of a protein or a large molecule, either by X-ray crystallography or by NMR, people have contributed it to this database so that you can see, other people's work and use it in your own work. And that was the training set for DeepMind's protein folding algorithm. And so it was actually really cool to see all that come together. I guess like the woman who ran the PDB said that there was like, they noticed all of a sudden that there were like these huge downloads of like the entire database a few years ago, and they had no idea what it was for. And it turned out Google and training, and that those downloads won the Nobel Prize. Pretty cool.
Wow, that's so crazy. And I feel like that kind of like proves that you have the foresight on like, these picking the sector that's like gonna pop. And I wonder when you were thinking about, I guess like, since I feel like you have a great career at a VP, as well as like, now you're a founder of your own VC fund. Maybe we could talk about what were some core lessons that you've learned at a VP that kind of you took to starting a fund today. One of the things that I've heard from your past podcasts that I felt like what really stand out is like, your background was not like an investment banker, and you had your own founder experience and researcher experience before going into growth stage investing. Maybe we could talk about like, what I guess like what do you learn at MVP, and from like a growth perspective, or growth investing perspective than like when nowadays I'm sure you look at a lot of earlier stage deals, and how do you think about that lens kind of like help you filter out the company that will actually have like hitting an inflection point and having the growth?
Yeah. No, when I joined IVP, I had been in graduate school and started a company, and then I've been at Canaan Partners, an early stage firm. And I had never really thought about growth investing because I thought of it as all like ex-bankers. But as I thought more about it, I thought it could be a really interesting opportunity for me because in a sea of ex-banker growth investors, like I would be different. I could stand out, right? Just, there weren't a lot of women doing that back then. Definitely not a lot of like, kind of weird academic, scrappy founders. And so I just thought I could appeal to a different type of entrepreneur, and just be a little bit more memorable when, a CEO is meeting 20 growth investors. And I think that thesis was right. And I joked when I first got there, I was like, oh, if this growth thing doesn't work out, I can go back to the early stage because now I've seen a bunch of companies that work. But I remember when I first got to IVP, seeing like a Series C company that like the CEO like blew my mind. And my partners were all kind of like, it's fine. Good reminder of like, I was so used to seeing like Series A CEOs that I had like this CEO was like the selection bias, right? And just because he was a good Series C CEO or founder didn't mean that he was just because he was a Series C founder doesn't mean that he was a great one, right? And I think there's just like it's such a good reminder of like, you build these like mental models and you build this kind of what like taking the temperature of what you think the world looks like based on like what you're seing. And so for me, seeing all of these like very, very early companies where people are just trying to figure it out, seeing somebody who had figured it out was he seemed outstanding. But then to folks who were used to seeing, companies that were working, he felt kind of, not impressive or middle of the pack. And so I really try to take that concept with me as I think about, where I am or where I'm investing today. Because the truth is like a really great like Series C CEO isn't necessarily going to be like the best Series A founder or the best Series A CEO, right? Like it's necessary. You have to, it's like, it's a necessary step on that path to get there. But like, they are different skills. And so really like what you're actually looking for are people that can like really like change and adapt to a new set of problems and kind of a new baseline of normal. Right. Because like, that's the only thing we know is going to be the same. Right. Like you have to be a really great Series A CEO. You have to be a really great Series B CEO. You have to be a really great Series C CEO to keep on going. Right. And so it's all about like, how do you learn and level up at each stage? And really like today, like that's what I'm looking for. Because if you actually strike me as a really great Series C CEO pitching your A, I'm like, oh, you're going to struggle for these next few years until you get there, because it's, you gotta like, none of it matters if you don't survive, right?
Totally. I wonder, so like since you mentioned about like, I feel like one thing about like being a good Series A, B, and C CEO, what are the difference between like becoming a good later stage CEO versus like early stage?
Yeah, I mean, I think the biggest thing that changes is really around understanding your problem set and understanding the type of talent that you need to solve it. Because it really changes, right? Like, and like just as you change, right? Like in the very beginning, you want you want people on your team who can go up and down the stack, like, who are jacks of all trades and can like figure everything out, right? Like imagine, sorry, my computer's having a moment. Imagine, you're hiring a marketer, right? At the Series A, like you want to hire somebody that's like a full stack marketer that can kind of do a little bit of everything. But at the C or the D or later, like that full stack marketer is going to feel weak in brand or performance or life cycle or some area, right? Whereas at that, that later stage when, what you're doing is so broad, you kind of want people who are excellent at each kind of, each area of marketing. Whereas at the early stage, you want somebody to kind of do like a little bit of everything. And I think like that ability to recognize that and find that person and get the best out of that person. And we realize that that job changes. And I think that, we kind of think a lot about how there's some stigma around, not staying at a company forever or like an exec no longer working out. But like often it's like, no, this exec is really awesome at like the 1 to 10, and now you're at 50 and you want somebody great. And like that, frankly, that person's gonna be better served going and finding their next 1 to 10 and helping that company be amazing.
I have a question for you. So like I really agree with you on like, the CEO needs like different skill set in terms of like hiring when they're like, hiring earlier stage, maybe it's like good to find like a great jack of all trades person, but like in later stage I guess like everything you manage become a lot more detailed, as well as like more well-rounded. You have to like really think about like how to ensemble a great company instead of just maybe building a product or doing something more, I guess, like minimum viable product like related things. So I wonder, when you're thinking about your fund, so like one question I had in mind, maybe, okay, sorry, my mind is like over the place. So like I think one question I have wrote down for you was like, I want to know more about like your diligence process, right? Like when you're investing in like Series A or I guess like it's not like the early like stage, but it's like, it's I guess they have to have some sort of like track record. How do you filter out the company that like will not make it? Because some of the companies may look like they have great metrics, but they may not really have the longevity to go forward, because like a lot of people's business plan are like, okay, our generation 1 is, I mean, like on top of my mind, it's like cloud GPU. But so basically right now maybe they're building like the number, just like product number 1, but their whole entire pitch is like, oh, we're gonna build like a full stack of products that become, oh no, Shopify. So like basically like how do you think about diligencing it, and then how long does it take you to diligence? Because I think for earlier stage, let's say like a seed or pre-seed, it's like, oh, you meet the team and then over the weekend you're done because the team is the whole thing. But for Series A, there is some metrics, but like how do you validate the metrics? Like who do you validate the metrics from? And then if you don't have a relationship with the expert that in that specific sector, I mean, in my mind, it's just always cloud GPU this weekend. But like, so let's say you don't know the expert in that category, or maybe like some people, but like you're not like you can't really figure out who is the person that you should like ask for advice from. Like, how do you really diligence a company like that?
Yeah, I mean, so I think there's like so many great points here, and it's funny. I'm looking at like a really early, like I'm looking at like a seed stage company right now, and I think the founders like can't believe like I'm doing like so much diligence. It feels weird, but and maybe I'm like overdoing it, but I'm just really trying to learn this market.
You better overdo it than underdo it. I feel like that's my theory about life.
Yes, yeah, for sure, right, right. Where like it's one of my old partners used to always say that it's easier to get divorced in the state of California than it is to get somebody off your board. And so like there's, I don't know, like it's all the upfront time is worth it. But I think there's a couple of things in your question, right? Like first, it's you have to have like as an investor, you have to build a point of view on like the value of their wedge, right? Most early stage companies say like we are going to like we have this small product today that is going to like attacking this problem that's either new or underserved, and we're going to use that wedge to like build a bunch of customer love, get really deep in with these customers, and expand from there, right? Like that's a really common story. And so it's kind of on us to decide if like, do I believe that wedge is like really, really valuable, right? I mean, like as I think about, I spent a lot of time with Braze. We never invested. I should have invested. I tried to like investment many times in Braze when I was at IVP. And for them, their wedge was they were going after like push notifications as the first piece, right? And then they wanted to build this like full like consumer CRM to compete with Responses, right, from Oracle. And it was so like to me that was just like such a clear wedge, because it's like, oh, like these push notifications are different. Like right, it's this whole new like motion, but because of that, you have this like you have a much different relationship with your customer, right? Because you actually have this like one-to-one like channel to them, right, via their unique mobile phone and push. And that means that like the underlying database about that customer is going to look really different than like for an email marketing, like, you know, the kind of last generation email marketing. So like not only do you have this like new wedge, like this new kind of like interesting thing to take advantage of, this new behavior, but also like the underlying infrastructure to like support that new behavior has to be different, because it's actually like a very different beast, right? And like something like that really played out well over time. Trying to think of a good example of a wrong wedge. I mean, there's like a million of them, right? But, you know, it's like, is that wedge, like, are you actually going after the place where like you're going to capture a lot of value, or are you going after a place where like, yes, you're enabling something new, but like you're not actually going to be able to like displace, you know, displace the incumbent or displace or change of behavior, right? Like I think that sometimes we get stuck here in the Valley around like, oh, of course we want like newer, better, faster, cheaper, but nope, like nobody gets fired for buying IBM, right? At the end of the day, a lot of times your customers are going to be much more risk averse, because if you're only giving them like a little bit of like, if you're giving them like marginal benefit, but the downside is that like, you know, their entire marketing campaigns, you know, fall apart, or they like miss, you know, they miss their number because they, you know, you broke your consumer email marketing, you're going to get fired, right? So you really want to be going after something where actually solving that problem is going to be life-changing and also like not super risky for your customer. So like Braze again is the example, right? Like like these push notifications are brand new. Nobody had a solution for them. And, you know, they didn't try to move in. That was big enough. And that was like a big enough problem and a juicy enough problem that they could build a big enough business until they started going after, you know, the kind of legacy players, right? Like nobody had to rip out a legacy player to take a bet on a Series A startup, and that helped them a lot. So I think it's like, what's that value of that moat, right? Or of that wedge, right? Like, are you actually getting in there to like an interesting place that you can expand from? And also like, is like what you're asking the customer to do, is it like high benefit with low risk for them? Because if it's if you're asking them to take a big swing on you as a Series A company, it's going to make everything a lot harder. So are you like, that's why I always am looking for like, where are markets changing, right? Like where is there some kind of shift in the market that an incumbent doesn't necessarily have an advantage, right? Because that's a place where a new upstart can come in.
Totally. I have a question on like the diligence process, right? Like I really like what you said about like having the moat or like having a wedge, like so thinking about something that like could differentiate them. But like how do you kind of like diligence the entire subject? Like, so I think obviously there's like a lot of investors that already have their own thesis, like they're writing online, but I feel like those are like really hard when it comes to you meet a company, that company is in a adjacent space. So and then also your like entire thesis, I think it's all made up. Like unless you hear about an idea 45 times, like I don't really think the thesis is like kind of like validated. But and then like you meet this company and then like who do you chat with to diligence this whole thing? Like I'm not saying who in particular. You don't have to give me like, oh, my friend John does this. But I'm just saying like what kind of like let's say using I guess like example that you just gave us, like I guess like how do you think about like the diligence process and how long do you have the diligence for a company before you invest? I'm sure like the founders also want to hear because a lot of it's kind of like a black box, right? Like people ranging from like, you know, a week writing a check to like 6 months. So like how do you think about diligencing something and then how would you progress with a company? Because you know from my research your fund is like investing in 20 companies and then like up to a $10 million check. And how do you think about like uh the speed of deployment? Is it like every month we have to do a deal or we'll die? Or like how do you think about like, you know, as an investor yourself, like on structuring the time? And then for the diligence process, like how long does it typically take? And then how do you kind of like structure your day towards like validating if that particular company is good? And then do you validate like 6 company at once? Like let's say, oh, I've talked to like 5 of their competitors, they all suck, and then like let's go with this one. Or I guess like how do you kind of structure your time towards this period?
Yeah, I would say the Series A, it's harder to try to talk to every single competitor just because often it's not clear. At the growth stage, you definitely try to, right? Over time. But I mean, there's a lot of questions there. So how we get smart, you know, I think a lot of it is like talking to people, like frankly talking to people and trying to find great people. Like honestly, we did a deal that we haven't really announced yet, but like in structural engineering, right? Like AI for structural engineering. And I honestly, like, you start pulling those threads, right? Like I reached out to like literally a friend that was like my college friend's first boss, who's still an architect.
Imagine a LinkedIn message thread. It's like, oh, can you?
Oh yeah, I was like, oh,
we
went skiing together in 2007. But like, yeah, so you just like, you start pulling threads, right? And like, I feel like I love doing like market research and market diligence because I love talking to people and like learning about how these like markets actually work. And I've also found like when you have like great conversations with people, they like introduce you to other people, right? Like we were looking at like a medical AI company recently and met a bunch of doctors. And then one of those doctors keeps sending other doctors to me. And it's just been awesome, like to meet all of these people and really learn about like how their lives work and like what's important and like what actually matters in these industries. Cause like an entrepreneur has a point of view on it. And that is like, and often that's a very like interesting, unique, nuanced point of view, but it's also from the point of view of like an entrepreneur, right? Somebody who wants to start a company in that space, right? Whereas like a practitioner, you know, for instance, like a doctor or an architect is going to have a different point of view because they live and breathe something different every day. And so like, how do you pull those points of view and like, how do you try to like meet smart people and like try to get them to introduce you to more smart people, right? It's a little bit around like pulling those threads and trying to build those networks. And I really think if you like just frankly approach it with curiosity and like wanting to learn about people, they're very open and like excited to talk to you. Like everybody, like we all like to talk about ourselves, right? And I don't say that's a bad thing. Like here I am talking to you about me, right? But you know, it's like it's trying to find as many smart people as you can. And so a lot of it's just like, you know, surrounding yourself with smart people. I think especially here, like I live in San Francisco, it can be hard. Everybody works in tech. That's not to say they're not smart, but like, how do you also make sure that you have a network that goes beyond just like the one thing that you do so that, you know, when you want to meet an architect or you want to talk to a structural engineer or a doctor or something like that, you can. So, and then also like, I like literally like on this like medical company, I was like literally reaching out to like office managers on LinkedIn, right? Like don't have a great hit rate, but like, you get one, it's better than not having talking to any, right? So, so yeah, so I think it's like, how do you try to find interesting people to talk to? The amount of time a deal takes depends on a lot of things, right? Like, and also like, it's not like you do diligence once and then like and you never use it again, right? Like, you know, I talked to a bunch of architects and learned a lot about structural engineering, and who knows, maybe like 3 years from now, I'm going to do another deal in like construction or resident or real estate development. And I'm going to like use learnings that I learned, you know, this year there. Or, I mean, I invested in Compass when I was at IVP and like years and years before when I was at Canaan, I met like a really like a YC company that was trying to build an MLS from the bottoms up. And I learned a lot about the MLS and I was like, oh, this structure is so bizarre and antiquated and weird, and learned a lot about it. And then like 5 years later, I met Compass and I was like, oh, like, I know how this world works and this idea makes sense. So I think that it's also like, how do you kind of like over time build that network and also like build the learnings and like, what are the key takeaways from diligence? Like, especially like a lot of times you invest, like you look at companies that you like end up not investing in. That doesn't mean you don't learn anything, right? The vast majority of diligence processes you don't invest, right? But like, that doesn't mean you don't learn. So I think it's like trying to kind of compound that knowledge over time and be curious. Totally. And then to your last point around like kind of pace and we have to do a deal every month. No, like, I mean, our goal is to do 20 deals a fund. We do a fund, like a fund is every 3 years. So that ends up being like 6 to 8 deals a year. Right. And, you know, for us, like, I very much believe like the venture world is like, has bifurcated between like the giant platforms and the boutiques. And we are very proudly and happily a boutique. But in order to do that, we, you know, everybody's money is green, right? Like all VC, I sell the ultimate commodity, it's money, right? Everybody sells money, it's all the same. So the only difference between my money and somebody else's money is like the person along with it, right? And so what we sell is like working with the GPs directly and, you know, deep partnership. And we are, you know, we're the founders and owners of our firm, just like you're the founder and owner of your company. And so we really believe in that like deep alignment. So all of that is to say that like we don't have like you got to do a certain number of deals I got to do a deal every month, right? It all kind of comes out in the wash. We try to keep our pacing pretty consistent because sometimes markets are slow and sometimes markets are fast, but like it's not clear. It's like hindsight is 2020, and the only way you can kind of like live through that up and down is to be really consistent. So we try to be consistent, but like that doesn't mean we're like doing deals just to do deals or not doing deals because we've done too many. I'll say like in 2021, we like definitely put the brakes on because deals were moving so fast. We felt like we couldn't be smart. And so like there will be times where we kind of pump the gas, or pump the brake, but there's no like, Roseanne, you haven't done a deal this month. You got to go do a deal.
I love that. I feel like you should always like take your time and like actually process like what's happening before making an investment. Speaking of that, like so I mean I wrote down like a few other questions while like I was listening to your other podcasts. One thing I thought about is like the relationship management. So like obviously I guess like as an investor there's like three type of people that you kind of talk to. One part is like your other investors, I guess, like your peers or like your previous network at your past funds, and then just like relationship building from with other VCs. Then the middle part would be like a bunch of founders that you already invested in, and then the third part is I guess the talents or like the second degree network from those two type of people, or like the people that you saw on the internet and you poach them, or I guess like from these three bracket, like which one do you feel like is the most effective deal flow coming from, and how do you justify the fact that like someone's coming from a warm intro? So I've been thinking about this, right? Like, so in the past, like, on my podcast, like everyone's saying, oh, you know what? Like, we just got a love deal from our existing founders. But I'm like, that's basically the founders, like cousins, right? Like, so it's not like physical cousin, but like it's more of like, oh, but imagine if one of your portfolio company is not performing that well, but like you already invest in them. Obviously, they're a great talent. And they like gave you a different founder that's like kind of like similar to their background or their existing network, and then isn't that like you're just like braiding cousins within your own fund? Or like how do you think about like the most effective deal sourcing strategy? And for like the other investors, I guess like when it's very early stage, it's like people are saying it's not there's no competition because it's like nobody believes in this company anyway. So you have to really convince other people to believe in this company, and then you co-invest together. But like I guess like for Series A or like something later, I feel like there is competition involved to a degree, right? So like how do you think about that relationship when you're like sharing a deal, but also I want to keep like having it for yourself. Like I don't know.
Yeah, I mean, there's definitely like this is like a industry where there's a lot of co-opetition, right? Like sometimes you're my like best friend and sometimes you're my competitor for a deal.
It's a weird industry. I'm sorry.
Industry, right? I mean, I think there's like a few things in that. Like for us, our fund size is relatively small, right? We're investing out of $128 million fund too. And that was also like pretty purposeful because of that, like I can participate in a round. Like I don't need to take a whole round in order for it to make sense for my fund, right? Like I just need like the check size to make sense for my fund, right? It's like the question is like, how does this check return my fund? Like what has to be true, or like what else do I need to invest in order for this to return the fund, right? Like I don't have to have an ownership, like a specific ownership target, or I don't have to have like a specific number of dollars at work in order for it to make it work. And so that helps like in that we can bring people into deals, or we can participate in other people's deals. So like I think on the competition, like that's a nice tool. But then on the other hand, I think that like on the great companies, like there's no extra dollars to have. So like you have to like there's no like extra allocation for anybody. So like you really have to like go and prove your worth, and sometimes that means competing against your friends. On the other hand, like the network stuff is really important for us because like I'm never gonna be the loudest person on like Twitter, right? Like
it's really hard to be the loudest person on Twitter.
It's hard to do today and be like, it's just like it's not who I am. It's like not what I enjoy. Like I think that I like I once upon a time worked with this like head of marketing that would like berate me for not like tweeting or blogging and kept pointing to
Oh
Fred
my
Wilson.
god.
I was like, Fred Wilson is excellent at this and loves this and that, and like he loves it, and you can read it, like you can read his love there. I don't have that love. Like I'm not going to be that person. Like it's not going to be the same. And so I think you have to find like the things that you love as ways to like, you know, because that's how you show up the best, right?
Right.
And so for me, like I really love talking to other people, right? Like I love like learning from other people and being curious and understanding like them and their lives and what makes them tick. And so frankly, like the deals that we do the best in are the ones where like earlier investors introduce us to their companies. And because when we get in the room, I think we do really well. Like if it's a sea of like who's shouting the loudest on Twitter, like we don't, and that's fine. Like other people do that. That's their game. Like I'm not going to try to do that. And a game that somebody else is better at me then, right?
It's a stressful game. Let's be real.
Pardon?
It's a very stressful game to be like
yeah.
on Twitter.
Yeah, and you know what, like it's, and like some people do it really well, right? Like, and I mean, I think like when we're talking about being loud on Twitter, like Fred Wilson is not that person, but like I think from like blogging and writing and sharing what you think, like it's incredible, right? People who are good at it are so good, and even people who like get a lot of attention, right? Like Sheil on like his Twitter is so good. I just like learned so much about like A380s this morning, right? And like it's like, but like he's just showing the world like what a great polymath he is, like how he knows about all these different things. And I love it, like, right. And I love it. And like I love like getting there and learning from him, like learning, and like that's where he spikes, right? And so like I love, like I think that we should all figure out like what we love and what we're good at and how we spike and spend time on that. And for me, like I like spending time with other people, and so I'm happiest. And you asked like how I spend my day, and I wish like I spent all my day with other people, but like just meeting people. But that's what I don't know. I like, for me, like that's what I really enjoy, and I think that's where I do the best. So that's what I try to spend my time doing in order to source and relationship build and also learn, right? Be curious.
How do you have a relationship CRM? But by relationship, I also mean like deal CRM. Like how do you track everything? Do you use actual Excel or Notion, or like what's the whole vibe?
So I don't have a personal CRM. Like I know some people do. I feel like it would be really useful, but like I don't. I just
feel like it's really hard to log everything.
Yeah, I'm just like, I'm lazy, right?
Yeah. It's like I have a copy of this person.
Right? And I'm like, oh, I gotta I gotta like text somebody. There's somebody I was like, I gotta text him today. But like, for our internal systems, like we use Apptio kind of as our like CRM backend, and then we use Coda. Like we're an investor in Coda, and even before we were an investor, I was like a big Coda user. So our like whole firm is basically built on Coda. And then we also have like Snowflake behind that because we do a lot of like data enrichment. We have a great like head of technology, and then he has a 2-person engineering team to build our internal stuff, which I like have opinions about, but I wish I had more time to like product manage because I love this stuff and I have like so many ideas. But yeah, I think for our like internal stuff, we try to like collect as much data and track companies as well as we can, just because we're a small team. So we try to think about like, how do we get leverage? How do we use like computers to get as much leverage as we can, so that like us humans can be doing all the things that we're good at doing, right? Like meeting people and building relationships, and computers can do things like log interactions and, find news information. But yeah, personally, I don't have anything. I've been like, actually I've been trying to build like a second brain, and part of that is like CRM. So I've been doing it like in like Coda, Bolt, and Lovable.
Yeah.
I've actually had the most success so far in Bolt, but
yeah, I just started using Lovable this weekend, just because I feel like sounds like I don't live in Silicon Valley, but I never used this product before. How do you think about, I guess like you mentioned about like the head of technology at the firm. I know that you guys are focusing on data. Like what are stuff that are like actually like, I guess like the data point that you're trying to collect, or like what are something that actually matters? Because I think everyone is building something on the back end, but like I'm not sure like what we're supposed to track, because that like someone changed their LinkedIn to stealth, or like the first employee at OpenAI. Like what else are we tracking here? employee number growth or like growth number or like what's a hope, but like that doesn't really make sense right now because like AI is like replacing a lot of people. So maybe the employee growth like stay at 20 and then their revenue is like going up. But how do you know the revenue if you talk to anyone? I'm sorry, I'm just thinking about
No,
that
I mean,
kind of
I
ad.
get you. I don't know. I am like, I actually don't buy this like because of AI or a company, like we're gonna have all these companies with like 2 employees. And I think that like Midjourney is such a great example of that,
Mhm.
right? Like 4.0 image generation is amazing. And you know what makes it even more, you know what makes it so amazing is that the UI, like the consumer product is like phenomenal.
Mhm.
Like Kevin Wheel is crushing it. I like you talking about this the other. I was like, you are like, I think the OpenAI product is like out of control good now.
Mhm.
Right?
Also,
Like,
marketing is genius. I feel like the like OpenAI keep pumping out these
I
like
mean,
now marketing things.
I was like pretty bearish on like the role like of like the role foundation models are gonna play. I mean, I guess like how I think foundation models are gonna go long term hasn't really changed, but like OpenAI has like built an incredible consumer product and it's amazing. But like Midjourney had the best image generation for a long time, but like they never got off Discord and it was like hard to use, right? And like frankly, like in like now in retrospect, like it's kind of wild that
Mhm.
they left it wide open for so long. And the truth is because like OpenAI went and hired a bunch of really awesome consumer product people who built a really awesome consumer product. And like though like that consumer product piece isn't AI, right? That's like good consumer internet.
Mhm.
And like that wasn't OpenAI like was able to do that because it's a great company with great people, not because it's an AI company, right?
Mhm.
And so I think that this idea that you know you're going to go compete like that everybody's going to have no employees is wrong because the truth is like I mean actually like Charles hasn't had a good tweet about this like over the weekend just about how like it feels like VC is really swinging back to warm intros and back to in-person events like even more because like now with like all of this like AI SDR stuff and all these email lists there's so much
Mhm.
spam like like nobody reads anything, right? And so it's like, oh, if you don't believe, like, if you think AI is going to is going to like take over your sales team, you're going to have a competitor that has salespeople that are like taking your customers to like a basketball game or a steak dinner or a strip club, and like unless your AI is doing that, like you're going to lose those deals. So, I think this idea that we're just going to replace everything with AI is wrong because I think there's still like great things that people do that like your competitors are going to do. And if you're too convinced that you can build your giant company with with like sub 10 people, like somebody's gonna raise money and hire more people and eat your lunch.
Mhm. Wow, that's deep. I've never thought about it that way. I'm still in the GPT, I guess, like last generation era right now. But I do think like what you're saying is like completely true because like every day there's like an event on everything from AI to everything else. But I do believe like in the end of the day, like when you're trying to close a deal, especially from a sales perspective, it's like a lot of it because I think people don't trust the computer or like it just gave you a more I don't know, it's like a weird dynamic when you I don't know, use AI too much at work already. It just kind of like maybe lose a point of like I guess like basically I agree with what you're saying about like, building the human component is very important. Um I guess when it comes to like building out your own team, um how do you think about like who do you hire first? And I know that you guys thinking about like building a team as like you're building a company and what kind of company that you would want to, work at. So like how do you think about uh besides you and your co-founder or the investor of the company, like how do you think about like shaping the rest of the team to build an enduring firm?
Yeah. So we're actually hiring right now. We're
Mhm.
hiring like a senior associate to principal level investor
Mhm.
because our great senior associate left to join a company. Today is his first day, which I'm
Mhm.
really sad about, but I'm really glad he's getting operating experience. But for us, like, I mean, we're 5 years old, so now it feels like a little weird to say this, but like in a lot of ways, we're like a startup. Um, everybody does jobs that aren't their job. And like,
Mhm.
I actually think that makes it fun. Like we got new pictures taken at our AGM. Like we had this like photo booth that like took these amazing photos. I was a photographer, but like it was kind of set up like photo. These these like amazing photos. They were gorgeous. And they were better than our headshots. And so I was like, oh, I'm putting these on our webpage. And I totally broke our website because Squarespace is really hard to use.
It's Squarespace? It looks so good.
Oh, well, I broke it. Well, I mean, I didn't build it in the first place, but like I changed the pictures. And in changing the pictures, I broke it. And then I was down for like a day and then I fixed it. And I learned about Squarespace. But that's like not technical. Like, usually like the MDs of the firm aren't the ones like updating the website, but like that's fun, right? Like getting to kind of do these things. And so for us, I think it's like, do you have that mentality of like being on a small team means that like everybody wears a lot of hats and like you see something on the ground, you pick it up. For us, our first hire was our operating partner, this woman, Susan Alden, who's been with us like from the very beginning. Susan's amazing. I've known her for like over 10 years now. But she was the first GM of Uber Eats, and then she became a head of people. And so she helps our companies with kind of people things, less around pure talent acquisition and more around, I say it's like build like org design and structure, building the hiring and firing machine and compensation. Like those are kind of her big areas that she works with. But Susan also like, she's one of those people who like just get stuff done and like see stuff on the board and stuff. And so like I feel like our internal HR is like, it's way above its weight because like Susan set it all up, right? Like, or like we have amazing benefits. We also try to be really thoughtful about like our processes, like this hiring process, for instance, right. Kind of, I think to your earlier points around like warm intros and these small, like kind of echo chamber networks, like we try to post our jobs like broadly and get people who frankly don't know us, even people that have like warm intros to us. We like ask them to kind of go through the front door and apply so that like, we can kind of get a broader reach and hopefully bring people in that, have interesting points of view and interesting backgrounds that like might not know a VC already. Right. So Susan, I would say like hiring Susan was probably like one of the very smartest things we've ever done. Just because she's amazing and our founders love working with her, but also she has such like great startup mentality of just getting stuff done. And she's also like one of those people who just does excellent work. Somebody was tweeting about this the other day. For somebody who says they hate Twitter, I'm like really quoting Twitter a lot. But somebody was on Twitter the other day talking about like safe hands, this idea of like safe hands. And I immediately thought of Susan of like, oh, you can go give her some big gnarly project and like, she's going to figure it out and it's going to be, and the work is going to be great. And just having people like that around the table who like do really excellent work and figure out hard things without needing a lot of like, I mean, Susan's a star or like a pro. She doesn't need any oversight, but like, people who like just can run and do excellent work and figure out hard stuff are like gold when you're getting started. And I think they're so important because also they show everybody else who might not have ever worked with somebody like that or might not have ever worked at a startup, like what that great looks like. And so I think finding those people who are just like excellent, like I do really like that idea of like safe hands, like, oh, I can give them anything and they're going to like figure it out and it's going to be good is invaluable.
I have like some other questions. Like, okay, sorry, I wrote down a bunch of stuff. It was so random. Like they're not really adjacent to each other. So, okay, love that you hired an operator and like you guys have a head of technology. Those are great. This is a completely separate question. I like today the flow is flowing. But, so I wonder. So like, okay. So let's go back to like, let's say fund one, when you're first raising the fund, like, have there any, like, I mean, I'm sure there's like, when, let's say like your LP gave you like two different opinion on things. So for example, they're like, some people want to hear that you want to stay small. And then some people want to hear that you want to become the generation fund that's like, I don't know, A and Z or something. So how do you think about like pitching your vision, but also like, being able to like convince LP that your vision is the vision that they actually want to back? Just because I think in the end of the day, like when you're building anything, like imagining it as a company, there's a lot of pivot along the way, and like maybe there's like something that works, something that doesn't work, or like there's one portfolio company that become like a unicorn, and then you just invest in that sector from now on. But how do you think about answering these questions when people are like asking you these opinions, and then like, do you ever challenge the opinion that like the feedback from LPs, because like they're the customer after all, and like how do you think about like, being able to stay true to like what you're building, but also like, adapting to things that are actually make sense?
Yeah. So pitching LPs is very, very different. Like pitching a fund is very different than pitching a company. And like pitching institutional LPs is very different than pitching like a VC or an individual. Right. So like when we started our firm, we had all of these ideas around like all the things we wanted to do, and like starting every single thing from first principles.
Your portfolio is really good. I want to say, I have like the second question is about the portfolio, but I would say based off your logo, I feel like it's like great logos all around. So I just
Thank
want
you.
to
Our friend Erica Eichel named us, and she like mocked up our logo, and we ran with like we never changed it. It was amazing. She's not even like a graphic designer.
Oh, both your company logo, but also like your track record is really good.
Oh, thank you.
Yeah.
We have great companies. We're very lucky. But on pitching LPs is very different. Like we had all these ideas around like we were gonna like do like strip everything away, like it was kind of from first principles. Another thing we wanted to do at the very beginning, we're like, oh, we're gonna like work with like consumer brand marketers and build like a consumer brand. And then we realized it's actually really hard to build a consumer brand around like selling people money. That's like there's just like we couldn't, yeah, it was hard. But LP, so when a entrepreneur comes to us, like I want them to tell me some like view of the world that is like unique that I've never heard before, that like makes me think differently, right? Like I want you to change my view of the world in like one area, right? Whereas like, and if an entrepreneur came to me and they said, hey, I'm doing the same thing as all of my competitors that have done for like 20 or have done for 40 years. And and that's my company, we'd be like, oh my God, go away. That's so boring. Right. But if you go to an LP and you say like, hey, I'm going to do the exact same thing as all my competitors have for the last 40 years, they'd be like, okay, great. Right. Like that's good. I think like in the beginning, we were trying to sell LPs on all of these, like a billion different ideas. And somebody gave us the really good advice of like, with LPs, you can only be 1 degree of weird. Right. Like it's like, the truth is like LPs are asset allocators, right? They have like specific buckets that they're trying to fill.
Yeah. It's like business school applications.
Yeah. Like, I mean, right. Like they're trying to build like they have different purviews, right? Some only focus on venture, some only focus on private markets, some focus on like literally everything, or like alternatives. I remember talking to somebody who like also did venture capital and timber, right? Like crazy things, right? And then you have people who like do the whole gamut. And so what they're trying to do is like they have a plan of like how they want to fill the world, and they're trying to figure out like, are you like, can you fit in a box that I have? And if you make it too hard, like if you make it like too weird, it's like hard to fit in that box. And I'm not like trying to say like this is like bad, but that's just a little bit of like how it works. Whereas like for us, we're looking for something like, oh my God, I've never seen this box before. I don't have a box for this, right? Like that's good for us. And that's not good for an LP, because like they're thinking their job is to think at a different layer of abstraction and to think very differently than we do, right? We all think in like different layers of abstraction, and that's valuable, right? And so I think for us, like I think in the beginning I was like, let me tell you 50 new ideas. But really, like, the truth of the matter is that like we are a relatively young firm full of experience with two like very experienced GPs who practice venture like in the way that we think is the best, right? Which is like, high conviction, partner deeply with our entrepreneurs, and build a concentrated portfolio. And frankly, like that's the core of what we do. Like on the edges, like we do things like we try to be thoughtful about everything we do and do everything different. But at the end of the day, like that's our box, and that's a good box to be in. But like I think we overly complicated the way that we told it in the very beginning. And so I think if you're raising money from LPs, it's like how do you like, we're an early stage venture firm. Like how do we make sure it's clear to everybody that like we are an early stage venture firm and we're two really thoughtful MDs, and we're like, we built this great partnership, but at the end of the day, we're like an early stage venture firm that fits in your early stage venture allocation.
For sure. How do you explain to people that like just like thinking about like becoming a generalist or like having a thesis? Because like every fund, like I feel like I hear about like a lot of people say, oh, we invest in X. And then when you look at the portfolio, it's like literally everything. So how do you think about like picking a strategy or sector to like go after?
I mean, right. I think to your point, like every generalist has a thesis, and every like thesis-based investor has like is a little bit of a generalist, right? Because like at the end of the day, like we can only invest in the things that come across our desk, right?
Mhm.
And so for me, the way that I like to like operate that is try to keep my like keep it as wide as possible and see what's interesting at the time. That doesn't mean I don't have theses, right, around like how I think things are going to work, but I tend to like to think about. I mean, we were talking about like foundation models, what OpenAI is doing now, and like I've been thinking a lot about like, okay, like what do I think like what are the interesting business dynamics that AI companies are going to have, and like that's more like a business model similarity or a strategy similarity than a than a sector, right? Like for instance, like I mentioned the structural engineering company and looking at a medical company, right? Like those businesses are very different sectors, but they have a lot of similarities in like how they're kind of thinking about their customers and going to market, right? And so like I have a thesis around like how I think, I think there's a really interesting opportunity for like these full stack AI companies that get into get into older legacy markets by looking like a product their customers are used to buying, right? By not trying to sell software first. And like that's a thesis that I have, but it's a pretty broad one and it's pretty general and you can apply it to a lot of companies.
How do you think about like portfolio construction? Since like you guys invest in 20 companies, like what kind of ownership do you have to have? And versus like the valuation cap, like do you have like a cap? Or like is this more depends on like, oh, the flow of the company. If the company is amazing and then as long as you get a piece of it, it's good.
Yeah. My partner always loves to say like the one law you can't break in venture is the power law, right? Like we don't have ownership requirements because again, like I think that can be at odds with the power law, right? And we don't necessarily have like valuation caps, but we tend to be pretty disciplined. I would say that's less of like a input and more of an output. But we're not super ownership driven. How what we think about is like, how does this check? If this is a big check, how does it like clearly return the fund? And if it's a smaller check, how does it return half the fund? Or if it's a smaller check that I'm like, kind of trying to build a position in a company, like what does the full check have to be in order for it to be really interesting for my fund? So we kind of do the math based on what needs to be true for this to be a fund returner at this check size and this price, rather than like I have to own 20% of this company or 15% of this company. Like if I can own more, I like to own more, but I don't need to.
Got it. Okay, so a soft skill question. Who do you consider as on your personal board of advisors?
Well, I mean, I feel really lucky. Like, like the first person I think of is like my husband, who's awesome, and then Renata, like my business partner. But it's not even. I don't know. I think I feel really lucky in that like I think less of like having a board of advisors and more having like a lot of like deep partnerships. Yeah, like they're both like, I don't know. I feel like those two people like know everything, and so it's like very easy to like just ask them about anything. But then like kind of that next level out are, I think of other GPs, and I also think of like entrepreneurs that I've worked with for a long time. You mentioned you had David Rozier on here. Like I think about companies all the time, and I like talk to companies about the way he grew that business for a long time, right? Because like when we invested, they had 11 classes, and now they have like
1 million.
Yeah,
crazy.
Like it's well over 100 now, but also like they also have like the voice agents and stuff like that. Or voice bots, they're not really agents yet. Yeah, and then kind of beyond that, like I also love like I think a lot about like who's the best person I know for this, right? Like how do I meet a bunch of smart doctors that want to talk to me and like will introduce me to other doctors, right? Yeah, I think I have like I think of like less about a board of advisors and more of like concentric circles of like
Mm.
great people that I can rely on for different things. One of the things about this job that's like really fun and also really hard is
Mhm.
that you have like 5 different jobs, right?
Mhm.
And you're switching all the time. And so I think having like a lot of like, it's all about like diversity of thought and a lot of fast switching. And so how do you like have a bunch of people lined up in each of those buckets, because you got to operate in each of those buckets?
For sure. I don't know if you have time for one real question and one fire round.
Yeah.
Okay.
Sure.
Okay. So the real question is like maybe we could walk through any of your portfolio company out, like how you meet them to how you diligence them to thinking about uh like winning the deal and then exit, like thinking about exit. We could use any of your portfolio company as an example. I mean, obviously I like MasterClass, I like Compass, I like Glossier. Like it was just like all the stuff that like,
Yeah.
people use all the time. Like, how do you think about, I guess maybe I would let you pick one of your favorite companies to talk about.
Oh, like the whole life cycle. I mean, I think Compass is a good one because it's public now, but
Mhm.
I shoot, now I'm trying. I think I actually met Compass through Thrive. I think it was like Jared Weinstein,
Mhm.
um, who was like Josh's first partner. Like,
Mhm.
I feel like he was like, I have a company that's like doing really well. Like, it's kind of weird. I'm not really like it. But I just like loved Robert. Like, Robert is like
Mhm.
a run
Mhm.
walls
Mhm.
type of person.
Yeah.
And actually, and they had like they had a term sheet from somebody else, from like an insider when we met them. And then,
Mhm.
sorry, like now I'm like going back, and then this is like 10 years ago, right? So yeah,
Mhm.
so I met the company through Jared Weinstein. They had a term sheet from an insider, like a hedge fund, and we convinced them to not take their term sheet and instead take like our term sheet, which like still let the hedge fund in, like just increase their round size. And I was doing the deal with Todd Chafee at IVP, and Todd broke his neck during the deal. Like he was in a mountain biking accident and literally broke his neck. Like he was in a,
Oh, wow.
and I was like, oh, like this deal's done. And I'm like, oh, like, oh crap. Like, this, like, we were trying to get, like, we're halfway through convincing this company not to take the term sheet that they had. And then like our deal team like broke his neck. But like, to Todd's credit, like we like got the deal done, which was pretty wild. Given that like he literally came, like when they came in to present,
Everything.
he was in like a halo.
Oh, wow.
Like
That's
he like fell off his bike in Tahoe and was like transported to the hospital as like purple helmet or something like that, because like he was like alone and they didn't know who he was. Like it was like a really bad accident type of thing, right?
oh,
Like
man.
life flighted away. Yeah, we got the deal done. And then working with that company was just so fun because Robert was like he's like a talent sponge, and
Mhm.
he was such a big believer in like I want everybody at the company to be smarter than me. Like
Mhm.
everybody on my team to be like better than me, and like just the people that he could bring in because of that point of view. Like my Alga vet, who like was the COO of Priceline, was his COO, and then she became CEO of Techstars. The CTO of Microsoft AI became their CTO. Like the guy who tried to buy Databricks inside of Microsoft. Like he was just such a crazy talent magnet. And then, I mean, he's had a really tough macro as a public company CEO, but I think that like I'm so long Compass. Like I think that he's gonna like rule the world. I think he's gonna like own the entire industry. He's
Mm.
just unstoppable.
Why do you feel like someone could become talent magnet? Like, what would you say is like the two key factor? I know that I want to be paying attention to the time.
Oh yeah. So I think like for like one, it's like I want everybody to be smarter than me. Understanding like who you are and like where you're weak, and bringing in people who are strong there and celebrating that strength is
Mhm.
so key, right? And I think it's harder said than like it's easier said than done, right?
Mhm.
I think that people say that, but like Robert, I think is one who really, really has done it. And I think like especially like in young CEOs, you see people have a hard time like letting things go, right?
Mhm.
Like letting go of something that like, I always say like in the very beginning of your company, like you're pushing code and you're writing checks, and then someday you have a VP of Eng and a CFO, right? But like you have to like let go over time. It's like parenting, right? And so the people who are good at good at realizing that they're not great at everything and that there are people who are better, and people that are good at letting go, right? Like getting high horsepower people and like letting them run. I think that's how you get great talent.
Writing this down. How do you fight over like if they don't have a big salary package?
Like, I mean, yeah, it's hard. Like it's always hard. I mean, I think it's around like selling the vision of the equity and also like the role you get to play and the person you get to sit next to, right? Like when you do find those CEOs who really are excellent at like building amazing teams. I think like Frank Bien at Looker, they were all just like that was like the most, like they beat plan like 22 quarters in a row or something like that. They were just like so consistent, and he just built such a great team of people that I'm sure could have gotten higher paying jobs elsewhere. But like, it was like, you want to be part of that. Like you just want to work with that CEO. You want to be part of that incredible team. You want to keep stacking those wins. But if it really if somebody's real, like I see this in deals too, if it's only about price, like it can be really hard to win. But like at the same, like every deal, every hiring is like, there's like so many variables, right? Like it really comes down to like one or two. And so it's like really like what's most important to you in those, and finding the people whose values align with you. Because if it's like for us, like in deals, if it's like price and speed, like I'm probably not going to be the winner. So
totally. Okay. Sorry for running out of times. Like, okay, I'll keep it 30 seconds. Okay. What's your favorite book?
Oh, I don't know. That's really hard. I read a lot. I just read Table for Two. I try to read a lot of fiction because I think it like keeps you like more empathetic and more creative. And I have too many favorites, but the last one I read that I really loved was Table for Two. I just thought it was like great writing, and there's like it's short stories in a novella, and he's an excellent writer. And
love. Who made the biggest impact in your career?
Pardon?
Who made the biggest impact in your career?
Oh my God. How long do we have? No. Probably Maha Ibrahim, who hired me at Canaan. And I don't know, just like gave me a lot of air cover to build a lot of confidence in an industry that like it's hard to be confident in sometimes. And I didn't realize like how great I had it. I didn't realize like how important the role that she played was until I was like much later in my career. But that was amazing. I'm so lucky.
Who would you invite to your dinner party?
Oh God. I mean, I'm gonna be cheesy and say like I would totally bring like I would want like Jensen, but I would also want like I don't know. I'd want to talk about the future, but I would also want like John Locke or something. Like I want like a old like I want us to be talking about like social contracts around like I don't know. I think like what's so interesting about AI is like the tech is changing so fast, but society is going to change so much slower, and like there's going to be so much dislocation there that can either for good or for bad. And so I think about that, or like Rousseau.
Where can we find you outside of work?
In San Francisco with my family.
Amazing. Well, Roseanne, thank you so much for coming to the show today. It was such a fun chat. I'm sorry that I like went over.
No, it's no problem, but I gotta run. Thank you, Grace. Have a good one.
You too.
Thank you.
Let me quickly end stream.